before we get into market plays from yesterday, let's just take stock. We're 1 month into 2012. What are your views on the flat performance for the market so far?
Thanks, Samantha. I think what we're seeing at the turn of the year into 2012 is a slow start, which was also impacted by the union strike, which occurred in the second week of January. You can see that the market has only gained about 30 basis points since the beginning of the year. Actually, the market closed down yesterday by 41 basis points. Of course, this was as a result of the decline in the prices of Dangote Cement, flour mills, and a few other blue chip names. What we're seeing basically is a market which is basically trying to understand, investors who are trying to understand what direction the market will go, particularly in view of the economic conditions, both locally and globally. I think we will see there will be some sort of a slow progress as we close out the first quarter. There's a lot of activity around the banking stocks, understandably so, because those are, historically, they've historically been the more liquid stocks on the exchange. Also, they present opportunities basically for short-term, for speculators on a short-term basis. So basically what we're seeing really is a slow start. You're starting the year basically from a declining position from last year. We're seeing that the exchange really is, or rather the activities around in the exchange are sort of reaching a support level where they're sort of stabilized slightly above 20,000 units. We're seeing a slow start really, and we'll see how it progresses as both the fiscal and monetary and economic conditions play out in the first quarter of the year.
And as you say, coming off the back of a bad year, one of the stocks that has managed to gain some of its losses for 2011 is Dangote Cement. Whilst it fell back yesterday, it's still 4.5% stronger for this year. And a key milestone for the company will be when it launches the cement factory at Ibesa plant. That's on February the 9th. It's also going to be a key date for Nigeria because it means that Nigeria doesn't have to import cement anymore. Are we going to see continued appetite for Dangote Cement going forward?
Definitely. With Dangote Cement, you only project that the company is going to grow significantly in terms of its operations. At some point last year, we had highlighted that the fact that the company is looking to expand beyond the local operating environment. We expect that position still remains, and the company will continue to expand its operations into the West African, and maybe, later in 2012, maybe we could see it also exploring the Southern African market. No doubt, Dangote Cement is 25% of the stock exchange. The company is the leading producer of cement in the country. So you expect that. Also, if you look at the fact that there's a lot of infrastructural development which is being planned both by the federal government and by the local government, and just looking around the environment, you see a lot of works going on in the economy. So you expect that somehow the demand is there. Clearly, the demand is there. We've always understood that there's a shortage of supply in the cement sector, and which is what has driven most companies to expand production, not only Dangote Cement but some of the other players in the sector. So we think that with the massive demand and with the scale that Dangote Cement has, it's really going to be a stock to watch both for the medium and the long term. So
poised for more upside there.
It will always be a stock.
Yeah. As you say, poised for more upside and fundamentally a sound growth story there. Let's move on to the food and beverages sector. We've had flour mills, which has been receiving some attention lately. It's invested 7 billion naira in edible oil refinery capacity. That's part of its 20 billion naira expansion into the edible oil business. What are your views on this diversification for flour mills?
flour mills is a big, I mean, it's the largest producer of flour in the country, and of course they also have interest in the cement sector as well. Their recent expansion and also with the capital raise that they did sometime late last year. Obviously, the company has plans to grow its operations in that sector as well. We think that the company has the capacity and also the managerial experience to execute the projects that it intends to undertake within the short and medium term. So yeah, I mean, the prospect of flour mills for us, I mean, the prospects for us are very bright. The stock has taken a panning in the last 2 quarters or thereabouts, but we think those are short-term shocks which eventually will play out as to the benefit of shareholders as the months and years progress and they conclude the plans that the expansion plans. We think in the next in the next 1 year or 2 years the company will be on a sounder footing to the benefit of shareholders and investors in general.
So Dangote Cement and flour mills are 2 long-term growth stocks. From your views, Chidi Wigwe, Associate Manager for Investment Banking from Diamond Bank, joining us this morning.